So inflation just came in for May, 1.7%. That's good. When you adjust for core inflation, we're at 3%, which is, on the high side of good. So there could still be inflationary pressure from tariffs, although maybe not. So it's too hard to tell still. It is a positive sign to show that, inflation isn't coming and hasn't come up. So that's very good. The other sign that's good is we started to see a few more housing sales in May, even though they're down year over year 13.3%, and housing prices are down about 4 to 4.5%. The sales were up 8.3% month over month from April. So there's a little bit of a revival. I'm hearing, that there could be multiple offers. While it's still a buyer market, there's good traction on houses that, are till sometime mid 2026. The way inflation affects the housing market is that if inflation goes up, that means interest rates are going to go up. So, and it also means that the cost of all the things that we need, the affordability of owning a house is worsened. I have heard some statistics like the city of Hamilton, where both inflation has gone down, wages have gone down, and housing prices have come down. So it sounds like that particular city is becoming more affordable, which is what we're looking for. So high inflation is bad for affordability. And it's also a double-edged sword, because it also causes interest rates to go up, which again is bad for affordability. So the key risk that we're facing that will cause inflation to increase is this global trade war. The global trade war, is tariffs put on, everyday goods, food, you name it, steel production, which will end up transferring into the whole system. So the longer this goes on, the higher the risk of inflation there. The other counterbalance to that risk is higher unemployment. But so far, our economy has been stable, which is good. Hopefully the trade war is negotiated over the summer, and that we come into the fall with some positive news. Well, I think if you're going to look about the current inflation environment, I think it's actually relatively stable. In the trade war, while it could cause some structural changes, ultimately, we are near the bottom and we're near the trough. So if you're a renter, enjoy the rent you're getting, but it may in fact go up in the future. So just, hopefully you have a good lease, but generally speaking, those are year over year. So for this year, you're good. For buyers, I still think this is a very good time to get out there and buy, and who's to say whether it'll be this cheap in the fall. I think the possibility that Bank of Canada will cut rates over the summer is relatively low. I think these statistics that came out today are not indicative one way or the other, and it gives them enough reason to pause, and I think that they're going to continue to try to pause. I do think it also leaves room for them to cut in the fall. So I think the odds are about 50-50 either way, but I'm going to vote that they would probably not cut this in the summer. I think we're optimistic about the market in the sense that I think we're in the early stages of recovery. However, there is still a lot of disruption. So for our business in general, we have to search for good deals, and they're out there because there's people that are on a different path, and there's still people that are as part of the correction path. So as these two paths meet, we're going to find very, very good transactions where people that are opportunistically buying are let's say fixing or resolving people that are have liquidity problems. I think then these paths meet. So people that need to sell meet people that want to buy and get a good deal. I think we're going to see a lot more of that behavior for the next 6 months. So from a Dorr Capital point of view, that's probably good business. So I'm optimistic. Are we going to be going gangbusters in the fall? I hope we start to see it. I don't think we'll start to see the full recovery till sometime mid 2026.